Are we getting ready to get a dead cat bounce in this market? What gives? It just seems like day after day after day, we're getting this relentless selling. We're not seeing major gaps lower. We're not seeing panic selling. We're not seeing even really above average volume. It's just a slow drift and drip to the downside. So where does it bottom out? There's a lot of indicators out there that are suggesting we are extremely oversold here in the short term. Now, I do think that we're probably going to go lower into the end of the year, but I do think that we are well overdue for a dead cat bounce of some kind. Maybe it only lasts a couple of days, but there needs to be some kind of a relief rally to be able for people, one, to cover their short positions, and two, to provide better entries to the downside. Also, make sure that you're liking and subscribing to my channel. That really helps me out quite a bit, guys. I can't express enough how much that means to me when you guys are able to do that. So make sure to like, subscribe, hit the notification bell thingy. Just keep helping me out that way. So Qs down 1.2%. We have SPY, it was down 0.8%, and you had the Russell 2000 down 1.3%. What does that look like on the charts? We're going to start off with SPY first. Here you have this rising trend line. We talked about this rising trend line going back to March. It hadn't broken it yet. The last update that I did. The last update, we were sitting right on here. We were in this declining channel in the short term, almost looked like a little bit of a bull flag pattern here where we could have bounced off and perhaps broken to the upside. But since then, the last two trading sessions, no relief in sight. Has went right through that like a hot knife through butter on this trend line. And it's also broken below this bull flag or declining channel in the short term, however way you want to look at it. So it's broken below that. We're starting to see a little bit of an increased volume here as well. And then you got this price level support. This is the next level that I would be paying close attention to from a price level standpoint. And then on top of that, you have this rising trend line that's pretty much fallen out just underneath it here. So to the downside, there could be a lot more headaches for this market going from 436 down to 420-ish. And if that's the case, that's about another 4% of downside. I don't think it can do that without getting some kind of a bounce in the near term unless we just have a complete panic flush either tomorrow or Monday. Again, like I was saying, you're not seeing a lot of gaps on the charts. I mean, these are pretty much days where we're either opening flat or higher, and then we're drifting lower for the entire trading session. And I think over the last 12 trading sessions, 9 of them have been lower. So definitely oversold, definitely looking for an oversold bounce at this point. May not even last but more than a couple of days to a week, but nonetheless, we want to see something to be able to get us off of these oversold levels. We've seen the stochastics here, and it's not a reliable indicator of when it's going to actually bounce, but it does give you an understanding of how oversold the market can get. And on the stochastics, we've been oversold since August 4th. And we're sitting now at a reading of 1.75. So extremely, extremely oversold. Do I want to be shorting here? No, I don't. And I was shorting up until last week. Yes, I wish I would have been holding my shorts into this week, but based off of the choppiness and the indecision that we've seen in the market of late, it didn't make sense to me. So I closed it out for a small profit last week. But looking at the Qs, and we'll get back to the SPY here in a second because I also want to do some Bollinger overlays with you too. On the Qs, we're testing this price level support here at 357, 358. That needs to hold tomorrow. If not, then we're looking at a test of this rising trend line here in the near future. That would be a pretty significant sell-off if we start going down into like the 348s. That's another 2.5% to the downside. And if that can't hold, and let's think about this for a second. If that can't hold and the S&P 500 starts to make that 4% move, then you're starting to open up the conversations for a pullback down to this massive trend line, which is around 319, 320. So in the near term, what we want to see, can we hold this 358 level tomorrow? If so, that provides a decent bounce, possibly back up to this 373 level. That would be about a $15 bounce or about a 3 to 4% rally. To the downside, if we break this level, then we want to see what happens with a retest of this rising trend line off of the January lows, because that is definitely back in play if that happens tomorrow. And then finally, this big price level supported around 320. Those are the big plays and price levels that we want to be watching for on the Qs. IWM, rising trend line here, right off of the May lows. That's been broken. We were talking about it possibly holding on Tuesday. It closed right on it. Now we're getting a definitive break to the downside. Now we're talking about a move down to 180, 183. So I think really before we get a bounce, the max pain in this market, and granted, I can always be wrong on this stuff, okay? Max pain for this market on the Qs would be this rising trend line there. And on IWM, it would need to be around this 180 level. So that you're talking about a 1 to 2% move lower for those two indices. On SPY, it's not as clear because there's not as much of a concrete price level. You could say maybe we come back down to this 431 level, which is sitting right there at a previous higher low. That can't really be counted on to offer up support because there's just not a lot of price point data there. And then we've got the VIX, and we've seen so much of the bears crush some volatility. It was like 7 out of 8 days where it was getting crushed, but over the last 3 days, that's not been the case. Instead, it's been continuing to rally off of the lows and pushing higher. Yesterday, at one point, we're down 2.8%, and then by the close, we were up 2.8%. Today, 6% drift to the upside. What is causing a lot of this stuff? Why is all of a sudden we are just going lower? Look no further than TLT. This is your bond ETF here. See here, the bonds are getting cheaper, and as a result, the yields are going higher. So when the yields go up, the price of bonds go down. That makes it to where there's a lot more people willing to go into bonds as a safe haven because of the kind of yields that they're returning. I know people right now, they're getting like 5.5% on some of these bonds and bills. So you want to keep that in mind. Volume is starting to get a little bit to the extended on TLT, like the Qs, like SPY, IWM. You see a bounce here, especially after drifting lower for a 6th consecutive day. These are big moves for bonds. You could very well see a bounce in the very near term. That should help SPY, the Qs, and IWM as well. Looking at T2108, 31% of stocks trading above their 40-day moving average. That's getting very extended considering that just earlier this month, we were sitting in the upper 60s, and late last month, we were sitting in the 70s, considering a move up to the 80s. So it's getting very overextended to the downside. Again, I think we can still get all the way down to the single digits at some point this year, like what we saw back in October and June and May of last year. But for this kind of a move, usually it warrants a bounce back in the opposite direction of some kind. Now, let's look at the Bollinger Bands. One of the things we haven't seen too much of late is these Bollinger Bands to the downside, these white Bollinger Bands. We closed below them yesterday. We closed again below them today. This is something that we haven't seen much of over the course of this year. On SPY, the last time we saw that was when there was the regional banking crisis. We closed below it one day, just barely, but it ended up marking the bottom of that whole event. Now, we also saw some back in December of last year where we closed below it for 2 straight days before we got a bounce. So we're starting to hit that point here where it would make sense for us to see some kind of a bounce just off of the fact that we're so overextended even on the Bollinger Bands. Same thing can be said about the Qs. With the Qs, not even during the regional banking crisis, and it wasn't really affecting tech stocks for the most part, but nonetheless, we didn't close below it back then. You'd have to go back to December of last year, the last time we had to close below the lower Bollinger Band, and that would be December 19th or December 20th, actually. So December 20th was the last time we closed below it on the Qs. Now we're looking at it for the first time here today. That's a significant move as well. On IWM, way below the lower Bollinger Band for a 3rd consecutive day. So again, these moves are getting very extended. The stochastics on IWM, it's 0.4. So remember when we talk about being overbought and it's sitting like at a stochastics reading of like 99.8 or 99.6? That's what we're seeing here with the stochastics, but exactly to the downside. So you'd have to go back again a pretty long ways here, back to the March regional banking crisis where we were closing below it. So we're hitting those kinds of desperate levels in the market to where a dead cat bounce would seem like it's in order. Don't forget to like and subscribe to my channel if you'd like more swing trading tips and analysis of your favorite stocks. Thank you guys, and God bless.